The broadcast is now starting. All attendees are in listen-only mode.
Let's see what we've got here. Good evening, folks, and welcome, and good morning, Hank, down there in the Hunter Valley. How are you, my friend? I hope all's well with you. How's the volume? Somebody please just type in the question box that you can hear me all right. 1, 2, 3, 1, 2, 3. What's happening? No one's got the volume. No one's got the volume. Oh, coming through now. Great. Okay. Delay through the internet. Sim up in Kuala Lumpur and the beautiful Peck Sim. Thank you for being with us today, folks. Glad you can hear us there. Hank, as I said, in the Hunter Valley, grandfather of the year. The Murph, always with us. Great to hear. Well, we've got so much to show you and tell you today, folks, and there's a lot of talking involved today. One of the sort of really super interesting things about the Daniel Code is that once folks join us, they tend to stay forever. And let me see if this thing is changing all right. Here we are. Yeah. Yeah, thank you. Sorry for that break, folks. They tend to join, once they join us, they tend to stay forever. And I sometimes forget that in these. Hello, William over in San Diego. Great to have you with us, my friend. I sometimes forget that and assume that, I've been doing this nonstop for 12 years. And it's so second nature to me that I sometimes forget to ensure that we do have new members, and they don't always understand what's been happening. Although, we have 70 or 80 odd articles and about more than that of webinars all available at the website. So there's plenty of material there you can find. But for those of you who are not clear on what happens in the Daniel Code, I'm going to try and clarify some of that for you today. Albert's with us. He's a tutorial guy. Good to have you, Anthony. He's down in Sydney. Anthony, hope you got Trade Navigator sorted out, but probably unlikely. Bob's with us. Carol, always wonderful. Special hello to the ladies. We don't have very many of them, and we'd like a lot more. As I said, Sim and the lovely Peck Sim, no doubt. Gig's with us over in either Myrtle Beach or North Carolina, one of the two. He's a bit of a swanning around type guy. He's a great golfer. Very keen on the golf is Gig. Graham over in a tutorial guy over in two tutorials he's done actually. He's over in New Zealand. Greg's with us. He's a wealth manager guy. Hank, as I say, Harold. Harold, I talk about members, once they come to us, they stay forever. Harold has been with us pretty well since we started the Daniel Code, and he's a wonderful guy. He lives in, or used to live at least in Redding, California, and I was over there giving a tutorial many, many years ago. And he was so kind to us. He was pretty much our host over there. Well, he was our host. He was so kind and so gracious. He's a wonderful chap. And he's a gold bug, so he's a happy man. Jan is with us. Jen, especially. Good to have you with us, Jen. Joel over in something beach, I remember. I should know by now, Joel. Something beach in the States. John, he's a new guy. John H. a new guy, getting to learn about it all. Keith, he's a tutorial guy. Mark, of course, the other Mark L., he's a tutorial guy, very good tutorial guy. Michael Peel over in God knows where, but last known was at Panama. Good to have you with us, Michael. He's a tutorial guy as well. Milton, wonderful. Everyone's here today, all our regulars. Peter Mack, the tutorial, the short-term trading guy. The other Peters, quite a few of them. Philip, good to have you with us. Scott, he's just about finishing a tutorial now. Here he is, Vero Beach. I should have remembered that, Joel. I'm sorry. Great. And Anthony said no response from Trade Navigator. They've been giving him a hard time. Had to go to bull charts. Good on you. Sean, he's a tutorial guy. Good to have you with us. Trevor, of course. Vince over in New York. He's getting towards the end of his tutorial. Lovely to have you with us. And, of course, William, as well as all the regulars. So great to have you, folks. So I'm going to try and talk about some things that are pretty basic to the Daniel Code, but I don't always express them in enough detail because I guess I've got in the mindset that, as I said, our members, once they come to us, they stay. And I assume that you've heard all this stuff before, but a whole lot of you hadn't. But here we are, the Daniel Code. It's a set of proprietary ratios that control time and price in all markets. And because of that, markets are rational, orderly, and sometimes predictable, which is not what most people think. And today we're going to talk about super trends. This is the definition of a super trend, or our definition. Won't be everyone's definition. People who trade different time frames have different views of markets, and you should never ever talk about trend unless you specify the time frame. The vast bulk of our trading is daily bars. That's for a basic reason that I have found that's where the most money is made, and that's what we're about. So we define a super trend as any trade that makes 100% or more of margin. And there's not an awful lot of those, and they're very, very valuable when you get them. Margin's the indisputable primary cost of any trade. You can't trade without putting up margin. A lot of the big institutions have managed over the years to avoid putting up margin, and a whole lot of interactive brokers, ETF clients, managed to not put up sufficient margin when oil had its wonderful plummet down to, they were trading the oil ETF, OIL, and it finished up at minus 39 on roll, minus $39, minus $38 on rollover, because they had a whole lot of clients who didn't understand that that particular ETF had some futures contracts buried in it. And futures contracts require rollover, and they were just not aware of that, so the whole lot of them got held, got caught holding these trades at the end, and interactive brokers had to pay out close to $90 million to the other counterparties to their trades. Big drama. Okay, so the various ways of providing margin. We trade only exchange-traded futures and spot forex, where we put up margins cash, and we always have to put up margin. If you get caught with a margin call, you're a very, very poor trader. It should never, ever, ever happen. There are other strong trends we see in the major equities, but from our trading point of view, each part of the trend stands alone. In other words, you look at the equities, very often they just go up and up and up forever. Rarely they go down and down and down. But we don't see those major trends as super trends. For our trading, a super trend is any market that makes over 100%. And it can do that in a number of steps. It hasn't have to all be continuous because we trade with fairly tight stops. So we'll often in a super trend be long or short, and then have a 1 or 2 bar counter trend, and then back with the trend. So those trends can be either positive or negative. I mean, the wonderful thing about futures markets that we don't stress enough is that they pay exactly the same going down as they do going up. And, once you know that, why would you trade anything else? People are always asking me, when's this market going to turn? When's the top going to be in? Well, it doesn't matter. If you're trading the Daniel Code, you're sure, I should say almost sure, I think sure is probably the best word, to be with the trend at those turns. I can't recall that we've ever missed a major turn in an important futures contract. Okay, let's move on. So here's our philosophy, folks. We trade only exchange-traded futures and spot forex, and we know that all trends and super trends start with a market turn, and that's why we're so focused on turns. In fact, if you can't trade turns, you're missing the whole point of trading leveraged derivatives. Because if you're trading them right, or I shouldn't say right, trading at least the way we do, you don't want to withstand a counter trend, because it might be only a 1 bar or a 2 bar or a 3 bar counter trend. Vladimir, I'll just type Vladimir a message, if you'll bear with me, folks. He's having trouble. He's having trouble hearing us. All right, let me send that off to Vladimir. Okay, sorry about that, folks. We don't want to withstand 1 or 2 or 3 bar counter trends, or I don't want one at least. And the reason for that is the signal for a turn that turns into a 1 or 2 or 3 bar counter trend is exactly the same as the signal that you get for a major trend change. And I can remember back in the early days when I listened to other people's views of markets. I can remember a chap telling me that trending markets only correct 3 bars, and he used a 3 bar counter. He used a 3 bar stop. In other words, he was trying to use 3 bars as a timing tool as his stop loss, but he was thanks gig. But that particular gentleman was said and did a whole lot of things that were not correct, and cost a lot of people a lot of money. Anyway, there you are. So we know there are lots of different ways to trade. So I'm talking specifically about how we trade, and therefore our definition of a super trend. There are unlimited numbers of ways to trade. Most of them are focused on stocks and shares and options, of course. Futures doesn't get a whole lot of coverage in the commentary area. But boy, it's the most wonderful market. If you've never traded futures, I urge you, take the time to learn, and you seriously will never look at trading anything else. So a lot of those sort of ideas lack evidence. Ideas like don't overtrade and winning percentage counts, they're code for I don't know how to do this, and most of those sorts of comments are. In the Danielcode lexicon, there is no such thing as overtrading, and winning percent is merely part of the trading equation. The Danielcode itself doesn't have a very high winning percent, and it's designed that way, but its average win-loss ratio is immense. The average wins 2 and 3 times the average loss, and that's what makes the big money. So don't get hung up on folklore, as I call it. Most of it's ancient, and almost all of it is wrong. So learn to trade the Danielcode way, and you'll never have any of those issues. So there are many things that we don't know, and it's what I call solving the I don't know puzzle. There are all sorts of things about trading that I don't know. What markets will do tomorrow or any time in the future? It's the largest question. It's also the largest I don't know. And I can tell you which market segments are performing strongly right now, but that advice is only relevant until the next trading session, because it might all change. And I have absolutely no views on market segmentation analysis or issues like growth v value. I trade all the futures, and we trade about 35 of them. A lot of futures in all of the futures markets and spot forex. Major institutions dedicate a large skilled workforce to this sort of analysis and make that a profit center. They charge a fortune for their analysis. And most of it is totally immaterial. In my view, the vast majority of it falls under the economist banner, or what I call witch doctors. They can always find reasons why something should happen, but they never can give you the trigger for when it's going to happen, and that's the great weakness of those forms of analysis. And the very vast majority of people, even skilled people, very skilled people, follow a narrative. They want to know what's the narrative, what's the growth versus value equation saying. None of that stuff matters, because there's the whole purpose of futures markets is that they're so highly leveraged. They are leveraged high enough to make profits. If they weren't leveraged that much, people wouldn't trade them. So really our best protection against a lack of volatility is really the exchanges. And you can see over the years, US dollar index used to trade with 2 decimal points. Now it's 3. The margins have been changed for all the time, but in particular, as some of the mini equity contracts have got the margins got too big for many people, they've introduced a micro mini contract. In other words, the exchanges are acutely aware that they have to present a tradable product to the people, and having sufficient volatility in those markets is vital, and that can be created by putting in a decimal point. All of a sudden you've doubled the tick number, and again, the tick value very, very rarely changes, if at all. I've never seen the tick value change, but they don't have to change the tick value. They can change they can change the number of ticks in a point, and they can gear that up that way. So with our trading, Danielcode provides a totally different and quite unique analysis of trading. We provide time and price levels where the probabilities of a market turn are enhanced. And once we've created that turn, we don't go ahead and say, I'm going to buy at that number or sell at that number. That's disaster. We're too conservative for that. We never have the hubris to think that we can create that level of signal. So what we need after a trade signal is created is a very defined and specific price action to verify that the market agrees with our analysis. And for all of our trades, we provide that specific price action to validate our view. When that happens, we say the trade has been elected. You'll hear me talk about trades being elected. That's what it means. We provide a specific number to enter any trade at. And once the market gets to that number, it's classified as being elected. Okay, so we publish these levels for our TO3, TO3 Plus, and success signals together with our suggested initial protective stop, and all of that comes under the banner of our long-term fourth seal analysis. If you haven't looked at the fourth seal, folks, you can have a free trial. Please contact Terry at support@thedanielcode.com, and he will enable a free trial for you of the fourth seal. You really should look at it. It's very, very good, and it gives you some context to put around your thinking. For that absolute worst of the I don't know clan is the dreaded outside bar, which is a pain, but we have specific protocols for that. In fact, the whole purpose of the Danielcode is that we don't know what the next bar is going to bring. We don't know what the market's going to do tomorrow. And that's the hardest thing to get through to students. Not only don't you know, but you don't have to know, because the way the Danielcode is designed, the last completed bar on the chart will tell you all of the orders that you should be creating to put yourself on the side of the greatest probabilities. And that's what trading's all about. It's about probabilities. And the red and black lines on the members chart, they're retracements of the range. The DC blue lines are extensions of the range. So you can usually assume that the DC blue lines are outside the operating range. But sometimes time, the effluxion of time when markets are particularly slow, they can create DC blue lines inside the operating range. And it's the breaching of those blue lines that, as you're going to see, are so important in defining a super trend. Okay, so here are our turns. Members charts, we covered 20 markets in the members charts. There are another 12 markets we cover. They all create their own signals, and those price levels are created entirely by the market itself. They're not fibs or any other method you're aware of. They're the self-generating conclusion of all market moves. In other words, the retracements come from an operating swing. The extensions come from a slightly different operating swing. They're all a function of past price action. And in the chart archives tab at the website, there are over 30,000 charts that we've published with the relevant trade signals over the years since, as I think I said, December 2008, we went public with the Danielcode, and it's delightful to see that we've got some members with us today who were members back then or very, very shortly afterwards. It's wonderful to see you all. Right, so here's the Danielcode proposition. All markets turn at and only at the Danielcode numbers. All Danielcode trade signals are conditional until they're elected. And we have over 30,000 archive members charts to prove that proposition. All the members charts, as soon as they're posted on the website, they're automatically archived. And you can go to that chart archive on the Danielcode website, and you can go through. They're all filed by date, and you can go through thousands and thousands of charts. And I promise you, you'll find it very, very difficult to find a market that's ever turned it anywhere except at a Danielcode number or within that 0.1% buffer that we allow to prove what we call target recognition. And that's pretty small. So here's the biggest problem for most people, and this is the way to solve it. Leonardo da Vinci, most of you will know, he painted the Mona Lisa. That's primarily what he's known for. But brilliant as that all is, and what a wonderful artist he was, that undersells him considerably. He was actually a great thinker, a genius thinker. And amongst other things, he designed battle systems, devices that can be used by armies of his client state. Of course, was Italy, a part of Italy actually at the time. And his early drawings envisaged a helicopter. I mean, this is hundreds and hundreds of years before flight was even thought of. But he designed a helicopter not far away. But he was so obsessed about secrecy and people stealing his ideas that he taught himself to write backwards. All the writing was done by hand, of course, in those days, no computers or typewriters. And he would write all of his notes backwards in a continuous sloping script. Extraordinary. And he could do that as fast as he could write in the normal way. So what I tell clients who have trouble overcoming this issue that we don't have future knowledge is to write this down. DOGTONMAI. And write it on a big piece of sticky plaster and stick it on your forehead. Because every time you look in the mirror will reverse those letters and they will say, I am not God. And I'm trying to get that through to our traders, and an awful lot of people have problems with that. They just stop at that point and say, well, I don't know what's going to happen tomorrow. No, nobody does. Anyone who tells you that they can tell you what the market's going to do tomorrow, run for your life. We can only see the river of time backwards. You know what's happened in your life up till now. Some of it's clear, some of it's not so clear, but you're aware generally of most of the things that have happened during your life. But that river of time, that stops right now. You can't see what's going to happen in the next minute or the next hour, let alone the next day. Only God sees the river both forward and backwards. And you are not God. I can assure you, you have no idea what the market is going to do tomorrow. And you don't need to know, because the way the Danielcode is designed is it gives you the optimum signals to create to put yourself on the side of the highest probabilities. Okay, so more of this protocol. Danielcode price and time levels are support and resistance, and the only valid support and resistance you can see on any chart are true highs, true lows, and the Danielcode price level. All else is fantasy. And if you don't know the difference between chart highs and true highs, you should be talking to me about learning how to trade. That's very, very important. But the Danielcode trade signals are totally silent on quantum. They can give you anything from a simple one-bar counter trend to a whole new super trend. And that's where your risk management and trading technique take over. So that's the conversion of your trading from here's the turn. If it does this, the turn will be elected. Now what happened? And it's your trading technique from then on, because Danielcode is on a trading time, it's creating new signals every day, almost every day. Better than 96, 97% of the time it's creating a new signal. And when it doesn't create a new signal, we have protocols to deal with it. That's another thing I'm asked, what are the best markets to trade? My answer always is only trade active markets. Remember the rule of 6 and its fractals. Make it the rule of 9 if you like. I'm quite happy with that, but go back through. Wasn't the last, it might have been the last webinar, if not the one before that. They're all the website, and have a look what the rule of 6 and the rule of 9 means for you. So for all of you members, Forex works exactly the same as futures, but the only difference is we use a 5-tick buffer instead of the 2-tick buffer that we use for futures. But our Danielcode Pro subscribers, you're the folks paying $249 a month. That's the backbone of the business, and I have neglected to post prominently enough that if you are subscribed to the what's called the website Pro subscription, we will add any two you like of our fabulous success signals to your subscription free of charge. I want to do something more for the folks who are paying Pro website subscriptions, because they really are the backbone of this business. So once you've got your additional success signals, which you can just subscribe directly to them if you wanted to. I'm just talking about people who are on the Pro website package. You can change those two markets that you subscribe to once a month. That's free. If you want to change them more often than that, you can. Contact Terry. He'll be happy to change them for you, and he'll charge you a $30 fee. So, or you can subscribe to our new whole of website offer at $4.99. You can see everything. All of the success signals, all the TO3 signals, all the TO3 plus, fourth seal, everything. Wonderful. All right, let's move on. So, this is the S&P EMini. I know I talk about it a lot, but boy, hasn't it been marvelous. Absolutely sensational. So, we're going to look at here a little bit at the February top, February the 19th, and then the very, very surprising low that came about 30 days later. Extraordinary. The fastest bear market in history and the fastest recovery into a bull market in history. It's extraordinary stuff. But this is what you saw at the high. Now, all I've got on here is a slow stochastic, a 1433 stochastic. I use that. I use a fast stochastic, a 533 stochastic, and I use our proprietary momentum indicator and time signals as well. So all you would see in the chart is there's your daily bars, there's the high coming in, you've got no idea what's happening with it or why. There's the question, why do markets turn? Well, you can have all the indicators you like on there. I don't think it's going to help you. Well, the one you need, that's what you saw at the high. This is what I saw at the high, or what all DC traders saw at the high. This is actually the chart from the day or two before, well, exactly the day before that big turn in February. And that's what we saw. And what came with that, look at this bar. There's your high, there's your blue line set up. We got a TO3 cell and a blue line cell. what's the difference? The Danielcode numbers are the difference. You can change any of the studies, you can change any of the indicators, you can have everything from none to 100. It makes no difference. They don't do what the Danielcode does. And the great unique difference of the Danielcode is that it creates these numbers. Red and black lines are retracements of the range. The blue lines are extensions of the range. And once these markets hit these numbers, which are like a magnet to markets, they fly to get to those numbers, all of them. And you're putting yourself in the position of a very high probability trade. And get this stuff right, and the money is huge. Have a look at this surprising low. This is the March 23rd low. A bit over 30 days. So fast, couldn't believe it. Very hard to believe that was a low. But nevertheless, that's what you saw. If you didn't follow the Danielcode, you didn't look at the members' charts, that's what you saw. Again, add as many studies as you like. It doesn't change the fact it's just an innocuous down bar. This is what DC traders saw at that low. Note the blue lines. This was the 2 days before the low. If you look at that blue line, you can see 3 lines down from where the market was at the time. You've got the blue line number 3173. Okay? And that created a TO3 and a blue line buy signal, which was posted on the evening of March the 23rd at 7:40 p.m. Have a look at that low bar hitting that blue line. Now that blue line's been on that bar for weeks and weeks, and you certainly saw it at least a week before the market even got there. So once it gets to the blue line, if it reacts in the right way, if the studies we use are correct, are in place, and the time patterns in place, what they say or what I say, when time and price are squared, a turn is almost inevitable. Now, time and price is an expression. Time and price squared is an expression that the late, great W.D. Gann invented. I've taken that expression from him, and I figure after dedicating 12 years of my life to Gann, that I'm entitled to take something from it. But I don't use it the way Gann used it. Gann used angles on his charts, 1 by 3, 1 by 8, 3 by 1, 3 by 8, etc., etc. And what he meant by time and price being squared is that time was at one of these angles, the price, I should say, rather, was at one of these angles, because by the very definition that it's an angle on the chart, it must contain elements of time and of price. Now, that's what Gann meant. I don't mean that. What I mean about time and price being squared is that time is at a known Danielcode vibration, and price is also at a known Danielcode vibration. They don't have to be the same vibration. You can have a time cycle of, say, 29 days, and you can have a price cycle that's multiples higher of the range. So that's what I mean. Time and price are squared, a turn is almost inevitable. And what you're seeing, these blue lines, is the start of time and price being squared. And this happens all the time. 2173 was the blue line. There was that low, was just about at 2173. In fact, I can probably tell you exactly what it is, but the time has moved on a bit there. But you've all seen that chart. That is one of the members' charts that we published together with the blue line buy and the TO3 buy. And it's amazing, isn't it? Specific. I also saw this. Here's the back into the this high and low we're talking about. That high came at the 62 cycle from a previous perigee. Now, I've talked in the previous webinar, I talked a lot about apogees and perigees. If you missed that, you can look at it on the website. All of our webinars, webinars are posted on the website as soon as they're processed. So, in addition to those blue lines, which were telling us the price was at an important level, we also had time. And the 62, the next basis of time, the ones we use all the time are 44, which is the time cycle for gold, 59, which is primarily the time cycle for equities and commodities, 62, It doesn't come from the Danielcode ratios, it comes from the rule of eighths, but it gets incorporated into the Danielcode ratios. Have a look what happened after that. The first rally back happens right on the 70 line. We got short from the high, we got long for the little rally up there, and we got short again on the second of the, just after the second of those inside bars. So I saw that. Not many people did. And this is the low. Remember, the Danielcode time cycles are valid for plus or minus 1 period. Why is that? Because it's valid to draw the time cycles from either the swing high or the closing high of the swing if it's immediately within 1 bar. So these are valid to plus or minus 1 day. The other consideration is when we're using planetary cycles, these might not have happened exactly on the day they're shown. If they happened on a Saturday, they'll be shown on a Friday. If they occur on a Sunday, they'll be shown as being on a Monday. And this is the new moon and full moon charts. But as well as that, we run cycles from the apogees and perigees and the fractals in between. So have a look at this. This has actually got 2 different time cycles sitting on it. The first one has the 70 bar, 1 bar before the low bar. The 62 comes next to it, comes from a different cycle, and it hits that bar that's got the new moon on it, 1 bar past the low. So from that low where I've just shown you where we had the exact low on our blue lines, and we had that weeks before the market got there, the time cycles, 1's minus 1, 1's plus 1, that makes that center bar where we actually got the turn as the functional low or the closing low, makes that pretty persuasive, doesn't it? Okay, so these trades were worth some part of about $50,000 to Danielcode traders. This is essentially what we did with our TO3 and plus signals, and also the 6S signals. First run down was 18,700. Little rally, we got $50 out of that, probably nothing after slippage. Next run down, $25,000. And then the first little rally up from the March 23rd low, $6,000. So all in there, there's some part of $50,000 for the Danielcode traders if you followed the signals. Extraordinary. And that is most certainly a super trend. The margin on this contract is about 13,000 plus something. And just the first push down from the February high blew that away. And the next leg down was even better. And those levels define this as a super trend. And later on I'm going to show you how you can see the start of those super trends earlier. So every trade has a failure point. And back here, I think I can get a chart up for you now. Just bear with me for a moment or two while I find it on the other computer. That's a long way back. Is that too far? No, there it is. So that first little black line, 2853.25, that's the low of the bar on February the 28th, and we had a buy signal on that. And the market went up a couple of days, then it went sideways for a couple of days, then we got short as it started to come down again. But at the time that signal is created for that day of February the 28th, you're going to buy that high 2 ticks above the high. That's your entry point, and your protective stop is 2 ticks below the low. And if the market takes out that low, that means the signal has failed. Didn't fail in the sense we lost money because we were long for the rally and short, as I say, from the second inside bar, the red ones. But technically that trade failed. That's the first thing that a super trend is going to show you. It's going to fail at Danielcode support. Remember, the only true support and resistance on any chart is true highs and lows and the Danielcode ratios. The first thing you'll see to give you an intimation of a super trend is that the Danielcode support levels will get breached, which happened there. Here's the next one further down. This is all the way now down to that's March 20th, and the day before, the little inside bar the day before created a buy signal. In fact, the bar before the inside bar, I should say, depending if you were trading TO3 and TO3 plus or trading the 6S, but that bar is March the 18th, created the buy signal. The trade was elected and then failed. In other words, the market went past the failure point, which is 2 ticks below the setup bar. That's again the definition of a super trend, the market breaking its Danielcode support and resistance. So, okay, let's move on. And so this is what you saw. I'm moving on in time to show you this doesn't just happen now and again. It happens all the time, every day, all the time. This is what you saw at the September the 2nd high. There it is. Nice picture, isn't it? But doesn't tell you much, in my view, without the Danielcode. Once you've got the Danielcode, have a look at this. All of a sudden, this is the actual chart. This is the members chart from this particular day, which finished with, this is actually with the finish of the large bar up. That's actually Friday, June the 5th. So this is the chart that was done on that weekend. And you can see there 3583.76. Let's see, 3583.76. And there's the, move along here, please, as I get my charts into order for you. Here it is, 3583.76 is that one. The next one, and it comes along on the next chart, it's 3565.20. 3565.20. I saw those numbers, and I'm actually talking about a slightly later chart than that, the very next one that was created. But as well as that, look what else there was. There were 2 time sell signals right on that bar. The first one, the 59, that comes from one of these 2 blue lines here, and that's right on the day of the high. That's the September high, September the 2nd. Right next to it, you can see at the bottom, you've got a 44 cycle. And the 44 cycle catches, actually that's the chart high the next day, whereas the previous bar is a closing high. And that generated a TO3 and a blue line sell signal. Take the trade, down it goes. Then we got the little rally, which we got. Then it goes down again, which we got. That's what I saw. That and the previous chart. I saw the Danielcode numbers. I saw this chart right at Danielcode resistance. I saw the other tools that we require to get a trade signal, time and price, and the other studies. I saw that. No one else saw it except Danielcode traders. And I'd say even better this, we have a lot of clients who like to trade the DAX, Germany's DAX. We have clients in Europe who absolutely love trading that. For those of you, same thing. Look, there's your setup bar that gave you the TO3 plus sell, went down for a couple of big bars. Look what happens after that. It starts to rally. It wandered sideways for a bit, and you got a TO3 plus sell right where you wanted it, and that just ran straight down, $13,500 in 3 days. It's a big contract, that. A lot of Europeans in particular love trading that market. So this is the gold chart, and we're up about this chart is just showing the initial run down, which returned $8,800 odd, but we're up about 84. We were up last night, believe it or not. Marvelous bit of trading this week, isn't it? Gold, we were up $8,200 in the short trade in gold. That's come back a bit today to $7,400. Still very, very nice. But if you have a look at the news post I put up yesterday, if you look at all these big trades we've had, and you wouldn't have got them all because a lot of them are correlated. In other words, S&P, Dow, Russell, NASDAQ, and Germany's DAX are all correlated to a fairly high extent to this, and that leads the effect that I tell you, don't trade two of these because you're essentially trading the same market. Trade one of them. Pick which one you like. Pick your poison. They're all great trading markets. But with all those trades and the gold trade and the US dollar index trades, the success trades, mix that all up, we're up some part of 54,000 last year by Wednesday's close. Okay, let's move on. Right. Here's Akshay. John, hope this doesn't sound like a silly question. What time for GMT, etc., should one refer to whilst determining the date of the new full moon? Akshay, you should you can get different readouts for that. There's a website called 12 something or other that's very, very good, and you should base it on New York time, because that's where the stock market is. The stock market, New York Stock Exchange, is actually in New Jersey. It's called the New York Stock Exchange. It's New York State, and what am I saying? Yeah, and what we're trading in futures on the equities, we're trading what happens at the New York Stock Exchange. The futures are made up of all those stocks. If you want to be really, really pedantic, as I used to be not so many years ago, when you're trading currencies, you're trading what happens at the CME website, which is Chicago. Okay? There's a couple of hours, 1 hour difference. It's nothing unless you're trading, excuse me, 3 tick charts, which I gave up doing a long time ago. It's great fun, but the stress it kills you. You don't make that money anyway. The most money is made by trading daily bars, Akshay, but yeah, that's where you should have it. So don't use GMT, use US Eastern Time, and that'll get you right on top of it all. So this is a trade August the 6th in gold. Same thing. We had a blue line sell, a TO3 sell. We had a time signal there. 44 is the Danielcode vibration for gold. If you're not well aware of that already, go to the articles tab at the Danielcode website, and you'll see there are 2 articles there, very important if you're interested in trading time, what it is and how it works. And the first one's called Masterclass 1, It's About Time. The second one is called Masterclass 2, Trading Gold. If you read that article, it's pretty long. It's best to print it out. You'll need to read them a few times if you want to really get into trading time. And 44 is the specific vibration for gold. It just, the combination of time and price is overwhelming. As I say, when time and price are squared, a turn is almost inevitable. And that was one of those ones there, and we're actually short gold again right now. Soybeans have been in a super trend. Have a look at this. The first, you had a TO3 plus buy right at the bottom of that chart. Remember, I said to you, turns are important because all trends and super trends start with a turn. So you have to know about these trends. What we've done with this shows you what our success trading's been. We're long there, we're short here, we're long there, we're short and stopped out there, we're long there, we're short there, we get long again here. All the way up, we get these 4 big bites of this super trend. The first one's $1,600 odd bucks. The next one's almost $2,000. The one after that's $1,800, and this final little push up was $1,000, and we're into a correction now. Now, this correction has actually run 4 bars the basic rule of thumb is that in a trending market, which this has certainly been in a very, very strong trend, a trending market will only correct 3 bars. That's not quite correct. A cleaner way of looking at that is that a trending market will only correct 3 bars, not counting inside bars. Inside bars, for trading purposes, we treat as a null or a void. We simply carry forward the last valid signal we had. Those of you who are trading TO3s and TO3 pluses, remember that we say for the TO3 plus signals that we expect them to be elected on the day they're posted for. But if that turns out to be an inside day, don't forget to carry that forward. It's a null or a void. Carry forward the last valid signal you had. Our website doesn't do that, I guess I haven't focused enough attention on that. But if you get an inside bar from trading point of view, you treat that as a null or a void. Carry forward the last valid signal you had. From a forecasting point of view, inside bars are vital. They form part of the fourth seal. Inside bars and outside bars are actually telling you something. Apart from being exceedingly annoying, they're actually telling you something. For tutorial people who are interested, in particular in the fourth seal, I show you how strong that is and how to do that. It's pretty savvy stuff. Okay, so that tells you that there's your definition of a super trend. Soybeans has been the super trend. It may go back into a super trend. All these rules can be broken. 3-bar counter trends, you quite often see a 4-bar counter trend. This market hasn't broken any serious support yet, so I suspect that it might continue the trend. But there you are. That's all this wonderful stuff. Folks, if you're enjoying this and you want to be able to learn to trade like this, to do this analysis yourself, analysis of time and price, I'm more than happy to teach you. We'll just, if you want to be a super trader, join the elite, email me, janeedham@thedanielcode.com. I'll send you some documents. You can have a look at them. If you've still got questions, I'm happy to call you, talk to you about your trading, discuss the options for you. But if you want to do a Danielcode video tutorial, I will teach you everything that I know, including everything that you've seen here and in previous webinars, and you'll be able to create these signals for yourself for the rest of your life. So do give me an email, send an email, please, if you are interested in undertaking a Danielcode tutorial. Okay, remember, I talk a lot about these signals. The business of trading futures and forex is actually not to be right. The business of trading is making money. That's what we're in this business for. And these super trends, of course, are the blow away big numbers of trading. When you get these super trends, you have to know how to get into them. You have to know how to hold on to them because they're gifts. And when we get those big super duper numbers, that's what really puts the top on your equity returns, doesn't it? Marvelous stuff. Okay, so folks, free trials, much to learn about trading futures and forex. If you haven't already had a free trial, you're most welcome to do so. We can offer you a 14-day free trial of anything you're interested in, or everything on the website if you prefer that. Contact Terry, www.thedanielcode.com. And go to the website, just hit the register button and that will start your free trial. If you have any issues at all, contact Terry, support@thedanielcode.com. Terry's our webmaster. He'll be happy to oblige you and ensure your free trial is active and working. This is our disclaimer document, folks, which I urge you to read. I also urge you not to trade real money on futures or forex until you are really sure that you understand what you're doing. There's a whole lot of people who get very, very excited about futures and forex. When you see the profits you can make and the leverage in these derivatives, they want to rip into it, get the money on the table, start making money. It's very, very easy to lose all your money. In fact, 90% of newbies, new futures traders, will lose their money in the first 90 days. I reckon it's worse than that. I reckon they all lose their money in the first 30 days. But learn, please, I beg of you, learn to trade properly before you risk real money. And that's it for the day, folks. So thank you for being with me. I don't think we have any questions at the moment. Yes, I do. Here we are. Greg's got a question here. Can't wait to review it later on YouTube. I've been trying to listen. Well, I was at a soccer game for my son. He's the keeper, and it was a great game. He missed parts. I understand that entirely, Greg. Good on you, mate. Terrific. I hope your boy had a great game as well. Thank you for being with me, folks. If there's anything you'd like me specifically to talk about at the next tutorial, webinar, I should say, send me an email. And I'll be happy to prepare something for you for next week. Akshay, I can tell you exactly any update on T-bonds. We've been flat T-bonds for weeks. It's just consolidating. It has no momentum either side. I'm waiting on success. I'm waiting for a breakout bar, which after that will tell me that it is safe to commence trading T-bonds again. What's my opinion of the volume profile? We only trade very liquid markets, Vladimir, and we're very careful about that. For example, one of the very best markets to trade is palladium, but the margin's gone up so much it's now scary, but it's very, very hard to add an additional contract if you want to. Live cattle and feeder cattle, both fantastic trading markets, but the volume's very, very patchy. You can have really good volume days and really bad volume days, and when volume's poor, you get slippage. You get slippage on almost all your trades anyway, and you sometimes get positive slippage on your exits, but stick to those markets that any broker can tell you which ones they are, or I'm happy to tell you, but make sure you're trading markets that are liquid enough that you're going to get your fills with a decent number, not too much slippage. Okay, thanks for that question, Vladimir, and welcome. You're a newbie. Glad to have you with us. Thanks, Hank. You too, my friend. All the best. And thank you, folks. It's Friday here down under at almost 11:30, and it's a beautiful day. The sun is shining, the swimming pool is beckoning. This is the start of summer, and the Bloody Marys are on standby. All the best, folks. Look forward to having you join us very soon. Bye for now.